Hi, this is Cajun, and it's time for a weekly conference call at vectorspaceai. We'll start with what's happening around the world. What we're noticing are a lot of IPOs, and one of them is Ant Financial, and they are going to be IPOing. I think they're going to be cross-listing on Asian markets and U.S. markets. We have GoodRx. They're IPOing in the U.S. I think they're going to go out on NYSE. And there are a few others that we've been talking about. And there's one reason why this is happening. What the Wall Street Journal noted was that individual investors are booming right now, and it's reshaping the U.S. markets and global markets when you look at the way that the global community is participating in trading stocks around the world. In the article, one of the key points mentioned, and I quote, trading by individual accounts for a greater chunk of market activity than at any time during the past 10 years, according to Larry Tabb, head of market structure research at Bloomberg Intelligence. During the first 6 months of this year, individual investors accounted for 19.5% of the shares traded in the U.S. stock market, up from 14.9% last year and nearly double the level from 2010. Mr. Tabb estimates, and his data does not go back further. On some days this year, about 25% of the market volume has been individual investor activity, said Joe McCain, head of execution service at Citadel Securities. So, traders around the world are participating in markets, and that is a good segue straight to the crypto markets and how that connects. Well, as we know, traditional market traders, many of them are looking to trade crypto. Some of them already are trading crypto, but when you look at the majority of them are not. And part of the reason for that is related to friction during the onboarding process. And in fact, when you look at the way stocks used to trade before groups like TD Ameritrade and E-Trade existed, stocks traded a lot like crypto, where it took a lot of individual steps just to accomplish a buy order or execute some kind of buy order or get your certificate delivered or whatever it was back then. Run the pink sheets across the floor to get some trade executed. Well, today, Fidelity is taking the lead in creating a frictionless onboarding experience to crypto. And they have announced for the first time a Bitcoin fund. And this is going to enable anyone to diversify into BTC and other crypto as an asset class. And Fidelity, as you know, they manage about, I think it's 8.5 trillion today assets under management, and they are paving the way for every other financial institution. It's one of the reasons for the run-up in BTC recently. On another note, Mark Andreessen from Andreessen Horowitz is joining the Coinbase board. That's kind of predictable, but notable and related to Fidelity. On the industry side, on the dataset, natural language processing, natural language understanding side, AI, ML side, everyone is actually looking at GPT-3. And that is the new language model that's been out for a while, and it's been getting quite a bit of accolades. But MIT is kind of raining on that parade, mentioning that its applications outside of forming meaningless sentences are scant. So, of course, companies like ours are proving otherwise. And one of the reasons for that is that demand for NLP and NLU continues to surge, and it continues to represent the tip of the spear in artificial intelligence and machine learning today. So when we look at what's happening inside vectorspaceai, we go to our corporate section and everything is spinning and in process, like large and small flywheels. We have got the revenue gears working and greased, and it looks like we are looking at an increase in revenue, and it's based on an increase in customer adoption, of course, and an increase in a modification to our revenue model. And we'll discuss that more in our strategy section. On to the engineering, operations, and product side. We're looking at a common request, and that is a request that we provide data sets outside of what we provide today, outside of natural language processing and natural language understanding, or a combination or hybridization of data sets, or a customized data set that requires us to go out and scour data sources, or perhaps triangulate data to form new data sources. So this is a common request. So what we're going to be doing is conducting an analysis on how valuable this would be in terms of revenue and traction, and we'll provide everybody with updates on that. We are also working on an updated dataset toolkit. I know we've been talking about this for some time, but as we engage in customer discovery, that's getting feedback from customers, we're realizing the modifications that we need to make to this dataset toolkit, which will be its own product line. It's going to be used by academic institutions and industries, and it's something that if we do it right, it will be easily integrated into workflows and adopted. So we're honing it, refining it as we go along here. So a lot of work is being put into just how all the components fit together, how they might be unplugged so they can be modified and adapted or created or redesigned as components to be fit into other data engineering pipelines. On the sales and marketing side, everything is humming right along, and we're refining our approach there as well. We are receiving a lot of academic sign-ups, and that's this week, and we've had a couple of pharma companies sign up this week. A lot of our sales and marketing is contingent on the dataset toolkit, this new release. We're calling it the DTK version 1.2. So we're throttling sales and marketing just a little bit. On the customers, partners, and collaborators side, we are terming a few of our customers with the naming convention Trading Desk-01, Trading Desk-02, Trading Desk-03. And that's to preserve anonymity, protect privacy, and we've gotten requests to make sure that we don't divulge any strategy related to some of these customers. But what we can do is we can talk a little bit about customer, or I should say Trading Desk 1, and everything is in process there. Trading Desk 02, they are waiting for us to deliver on the 24-hour scientific abstract updates. So that's in process. On Trading Desk 03, and these are all revenue generating customers, by the way. On Trading Desk 03, we're looking at, this is a company that provides financial products to investors, and these products are used in classes that educate traders to get their broker's license or MBAs or whatever to work on Wall Street. And this product is also designed for PE firms when they conduct due diligence on public companies. So what they want to do is they want us to provide a SOW, a statement of work, and they want to bundle our data sets and engage in enable thematic groupings or thematic baskets of potential acquisition targets or companies that fall into certain financial model clusters. So they have they have their parameters and attributes that they want to operate by, and we are working within those parameters to deliver something that can enable thematic baskets for their audience. And part of their target audience are Robinhood investors. So they're also looking to do a pilot and a potential joint venture. We're going to be introducing them to a few of our investors on the private equity side that are looking to buy financial products that help them engage in better due diligence with public companies. Now, on the other customer and partner and collaborator side, we are throttling everyone right now, and that enables us to learn and flesh out and modify our deliverables here. And that's what we're doing, and we're running thin on engineering, and this is what you do. Everyone runs thin on engineering. This is just a par for the course. But when you do, you have to make sure that things operate on parity with engineering, and that's why we are throttling things right now. If we got ahead of ourselves, that would result in a lot of customer dissatisfaction, and that's not what we want to do. So if we throttle and act slowly and methodically, we won't burn any bridges with customers and with the market. So we want to make sure that every step that we take is well calculated. On the IR, PR, and Marcom side, that's in process. I have a note here that is in process and gated on engineering. On the exchanges side, also in process. And that would also mean that we have no updates on the exchanges side. We're also still waiting to hear. We have questions from the trader base. The first question is, given that Palantir is still very much unprofitable after 17 years of business, in good part due to engineering costs associated with client-specific implementation, what will VectorSpace do differently to achieve profitability sooner? Well, our whole revenue model is different. Our revenue streams are different. For example, we have a pay per data source stream, a pay per update, pay per minute, and these are with a strict focus on data sets, and data sets with a strict focus on natural language understanding, correlation matrix data sets. We're also not building out consulting teams along with all the overhead that comes with it. Before Palantir existed, we were doing, that's how Mike Muldoon and I met. In fact, we were doing consulting for a number of financial companies. Empower was one of them. They got bought by Morningstar. They were a company that we learned a lot from when it came to understanding the downside of building out big consulting teams, big consulting arms for your organization. It's very expensive, very time-consuming, and it slows innovation down tremendously. But if that's how you want to pursue revenue, then you pursue revenue that way. We are not pursuing revenue that way. Our pursuit involves the SaaS model, software as a service, or better yet, data as a service, data sets as a service. There are some companies that are offering artificial intelligence as a service. We are offering data sets as a service, and we understand that this is the most profitable and the largest addressable market that you can target. So we are focused on different revenue models and different ways of entering the market and different sectors. We also have a focus on maintaining knowledge domain expertise in the areas that we target. So we're targeting the financial markets first, let's say concurrently with the life sciences industry. And we have extensive domain expertise in both industries, so we're pretty comfortable there. And they are very large markets. The next question is, I believe that the already disclosed projects with data providers the ones we've been talking about should help margin-wise. We've been talking about S&P, Bloomberg, FactSet, others like that. Should help margin-wise due to high initial setup costs being amortized through each data set sold on their platforms. However, investment funds and other custom projects will likely return lower margins due to the aforementioned costs. What are your thoughts on this? Well, our immediate thought always is that enterprise work is a minefield. It would be much nicer to be able to have customers or consumers be on the consumer side and have everything function through the consumer market. But that's not the right approach in an economy like this. We understand that focusing on the enterprise side will require a lot of resources and a lot more work, but it's worth it. As long as we don't overcommit, so we're very careful that we don't oversell and underdeliver, for example, and that we set the right expectations along the way. And if we do that, then we'll have, life will be easier for us, for everyone. So we'd rather have a fully automated business development pipeline, of course, but we understand that, we learn the most when we work with enterprise customers pretty closely, especially during these initial stages of revenue. So we can flesh out new opportunities, new ways that we can make the customer happy or more satisfied, new ways we can engage in customer support and customer retention as well. We also know that enterprise work, although it's a minefield and it takes a lot of hand-holding and a lot of engineering resources, it serves as bread and butter and helps companies stay afloat through uncertain economic times. That was exemplified during the last crisis. Companies that offered consumer-side services or retail-side services did not fare very well. Companies that offered enterprise services, they were able to survive, a lot of them, if they had them in place, humming along. And that's what we plan to do. The next question is, I assume that AI dataset implementation is quite labor intensive. Will it necessitate an increasing amount of employees to help with the workload? What do you think? Yes. The next question is, can you give an update regarding LCX smart baskets and their current and future usage? Do you envision LCX receiving significant usage in the future? Yes, the update is that it's in process, and yes, we do see significant usage in the future. And the next question is, can we provide some kind of search function for Telegram or Telegram chat? Yes, we can do that. We did that in the past. We're going to do that again now that we've got a few requests for that. And the next question is, how do datasets connect to thematic investing? Well, that's very simple. When you look at a theme, you can connect public companies to that theme or cryptos. And you can do that with a data set. And when you look at themes that we process, they can be topics, they can be global events, and they result in clusters. Those clusters are baskets. So you can look at thematic investing as a way of trading thematic baskets. Next, we'll move on to, we have an additional section we've never talked about before here, speculation from the trader base. And there's been speculation on whether or not our tokens would be dissolved or canceled if we were acquired as a company. And that won't happen. The VXV as a utility token, as a tradable asset, is intrinsic to what we offer, to every product that we offer. The reason for that is related to data provenance and data lineage, and that relates to data governance. And if your data doesn't have the proper governance or provenance, or doesn't have the proper tracking, and there are errors within the data, then that can cost lives. So we want to make sure that people understand that there are two primary reasons that the token is not going to disappear or go away if we get acquired. We are all about the token. We are all about the trading vehicle. That's why we're here, because we recognize that access to a truly global capital marketplace is the future of the financial markets. And you don't play that game without a trading vehicle. And that is the most important aspect of what we do in terms of how we manage capital, not only for this company, but for our shareholders. The data sets are also connected to the token, and the token to the data sets. They're one and the same. You have to be able to access VXV. You have to be able to, if you want to access a data set, you have to access VXV and vice versa. And that also makes every customer of VXV an investor, and every investor of VXV a customer. Every trader of VXV a customer. Every customer a trader. There's also been speculation related to equity and how equity connects to the token. Equity does not directly connect to the token. Equity and the token do not have a direct connection in terms of valuation. But there is a connection, and it is up to the public to make that connection. We do not make that connection as a company. There will be equity awarded to certain token holders, and vice versa. On the dataset insight side, we'll just talk about that in the strategy section, which is next. And under strategy, we have the VXV developer support channel that we've established this week. There we are discussing dataset insights. And some of these insights relate to questions that the public has had and questions that our customers have had. This is a free and open forum, and anyone is invited to ask any questions they'd like in the context of data sets and in the context of our revenue model associated to data sets. We won't be able to answer questions that are related to proprietary aspects of what we do, or related to trade secrets, or related to customers, confidentiality agreements. Next, on the strategy side, we've got the modified revenue model. And as most are well aware, our initial revenue model was based on 99 cents per data set per update. And that gives you an average of about $42,000 a month if you want the maximum number of updates per data set. And we offer hundreds of millions of data sets, up to 100 billion. And that number might sound outlandish to some, but that's based on all the possible permutations and combinations you can have in rows and columns and contexts and topics and events and themes related to data. So what we've chosen to do was modify our revenue model to reflect the work that we've discovered, the additional work that we have sussed out based on our close interaction with customers. And that's resulted in understanding that certain customers are really just interested in certain kinds of aspects of the data set. For example, they're really just focused on rows. Certain customers are focused on maybe an additional column or two. Other customers are focused on the kind of context control they'll have access to. Others are more focused on updates. Others are more focused on the particular data sources. So we've decided to charge 99 cents per data source with a maximum of 100 data sources and a minimum of 2. and 99 cents per row type with a maximum of 1,000 row types, minimum of 1 row type. 99 cents per column type with a maximum of 1,000 and a minimum of 1. 99 cents per context control, and that's at a max of 1,000 and a minimum of 0. 99 cents per update with a max of 43,200, which is the average number of minutes in a month, with the minimum institutional minutes being 100 per month and the minimum academic minutes per month at 1. So that gives us 5x that gives us 5x more on our revenue model. That's what we're looking at there. We'll talk more about that as things unfold, as our customer discovery process unfolds and as we sign new customers and in further updates. On an unrelated note, we have had questions from the public related to why there's been no PR from CERN, for example, or others. Well, one thing to remember, I think it's pretty important, that part of our professional background before crypto existed was based on trading headlines, trading news, PRs. We then developed algos for trading news. And here we are today, trading events, basically. This is news. We know a lot about trading news because we also operated a public company and understood the effect of headlines from both sides, from a trader's perspective and from a company's perspective, and from a private company's perspective, which is completely different. But we're talking about trading vehicles here. So you can be confident that we have an acute understanding of any inner workings associated with PR strategy, because we successfully executed on these in the past. It's kind of like sowing seed or farming. You don't set the exact timing on anything. The market does. You just set the table. The rains will come and then it'll be harvest time. So we've set the table, and here we have product market fit. We also have team to product fit. We have expertise, built-in in-house expertise, and we're gaining traction. And the next stage, the next milestone that we're looking at as a company would be that hockey stick curve upward, or that exponential curve upward in revenue. That's the next stage. That will get us to where we want to go as a company. This has been a pre-recorded call. If you have any questions, you can send them to us online on one of our channels. Otherwise, thanks for joining, and we'll see you online.